Hello, everybody, and welcome back to another episode of the How to Stock Market series with your host here, Jimmy K from How to Stock Market. For this video, we'll be going over the company Sgrp. That's the ticker symbol. The company's name is called Spar Groups Incorporated. This recent closing on Friday, this company shot up all the way from the $1.30 range all the way up to the $2 range, meaning it had an overall increase of about 51%, I believe. Yeah, almost 60% just intraday. So that's a huge upswing in the stock. And the reason for this, by the way, if you guys didn't know, this is an advertising and marketing company. So it handles a lot of small businesses and retailers alike, and expanding that market in specific. So if we look at the news, we can see that the Spar Group acquired Resource Plus, which is another subsidiary that they just recently acquired, and this will allow to expand the U.S. installation and merchandising services and businesses. So this is applied into 10 different countries throughout North America, Latin America, Asia Pacific, and Africa. It's as we can see here, it's increasing domestic businesses by 51% interest, and the Resource Plus Incorporated. So that's huge news for lots of retailers are coming up, and it's going to help benefit their business and marketing as well. So it provides a lot of value for these other small businesses, which is the reason why it had such a large upswing just closing on Friday. The CEO of Resource Plus said, "Gaining Spar as a partner will deliver new value-added enhancements for our customers. Spar's proprietary retail operating system, SparView, enables tighter operational control to provide faster, more efficient stores execution along with enhanced insight into retail conditions. The Spar's network of more than 8,500 merchandising specialists expands our ability to potentially accept more projects and accelerate program execution." The CEO of Spar Group said that the skills, expertise, and services added by the Resource Plus align with evolving needs of the retail landscape, are revitalizing the overall shopper experience. So this is ultimately going to improve a lot of different retail businesses, and these two companies working together will allow to have a better better experience for customers, and provide more complementary services for them as well, in terms of just merchandising and marketing of that nature. So as we can see here, which is it's impacting the grocery, the drug, the department, furniture, hardware, computer, office supply, electronic. So all these various markets, it's helping to improve those markets to grow even further than it is right now. And this indicates that overall this company is a growing market and can potentially grow even more, depending on how well this partnership goes. So a lot of focus is on retail and retail outlets and merchandising and branding, and helping overall customer acquisition and influence and of that nature. And then apparently the market seems to have a very bullish, bullish prediction on this. As we can see here, this increase of 60% intraday, 60%, right? Previously, before that, it's been steadily consolidated at this lower $1 range, and it just shot up huge all the way up to $2. If we can see from the initial IPO, it actually has reached the $3 range before, and that's been consistently traded within the $2 range, and it recently just bounced back up to it. How the stock will perform going forward is still uncertain and very unpredictable. This may be an over prediction by the market, and it may be shorted. Most likely will be shorted back down to potentially the 130s. That's a very high probability. Or it may even break through the initial resistance levels from 2014, 2013, which would be less likely, but also very probable depending on how well this partnership goes. As we can see here from the revenues, it's a growing market. We can see that the gross margins increased from 20% from the previous 17%, so overall a 3% increase, which is fairly a large, very, very good growth. And the operating cash flow of 54% is about the same as change in earnings, so not too much change in the cash flow, but the earnings has been slightly on the upper trend. And as we can see the market has taken that into consideration, and thus shows how the market is currently traded now. So yeah, with that being said, I hope you all enjoyed this video. This may be a potential stock to keep a watch on. It may help businesses of retail merchandising and field marketing to improve sales and help a lot of retailers, which kind of does need help in this current economy, especially with companies such as Amazon overtaking a lot of these retailers. So who knows, maybe this may bring some competition to companies like Amazon and Alibaba and such. So yeah, I hope you guys took away something from this video. Maybe it gave you some insight on how this company is doing, or how it may potentially play out going forwards into the future. It did recently acquire a partnership with Resource Plus, which means that this company and Resource Plus, they're both making moves, and it may provide huge dividends going into the future. So keep a watch out on that. And once again, y'all, stay safe in the markets and keep studying. I'll see you all next time, and have a great day.